For Your Money is brought to you by NelsonCorp Wealth Management.
It's now time for Your Money. We're joined by David Nelson, CEO of NelsonCorp Wealth Management. Welcome back, David.
Thank you, Brandy. Appreciate it.
So we occasionally hear about things like leverage in markets. Can you walk us through what that means and what's happening with it right now?
I have a scary term I'm thinking as far as to many individuals out there. It's basically referring to borrowing money to buy securities, buy stocks historically. So that term margin debt is really important. And when we're talking about, again, why would somebody do that? It's with the hope and the belief that they can magnify the returns as far as the upside, but it also cuts the other way. So to illustrate this, I brought along a chart that's going to show as far as historically, and the chart's going back to 1947. And the first thing that we look at is, and I think this is very, very important, that the increase as far as the seeing that chart go up essentially starting to take place in the 90s. And what we see in the 90s is that the appetite for risk had increased significantly. And as you see in the far right over there, and I think that's a really important point, is that we're not at all-time highs. History says when this starts hitting all-time highs, that's a real danger point that people need to be careful of.
Okay, so what should investors take away from these trends in margin debt?
I think it's wise for investors to keep an eye on these type of indicators. This is a really important indicator. Folks should pay attention to it when we start seeing the craziness that we saw around the year 2000 as far as with debt. And again, this type of debt, market debt, where people are basically borrowing money as far as to invest, that's generally a bad sign. So be very careful.
All right, David, as always, thanks for joining us.
Thank you.
If you missed any of our discussion, we'll make it available for you on ourquadcities.com.